Okay, in order to project our cash outflows, the amount of cash we're going to have to reinvest in our company, we're going to have to project changes in balance sheet items that will affect our cash flow. Okay, and again, we're going to use sales. We're going to express, we're going to divide the amount that we have invested in working capital and in property, plant, equipment on the balance sheet into our sales number, okay, to see what changes we expect. All right, we'll look for trends in the percentages. We'll talk to management why our investments in these working capital items, accounts receivable and inventory, and property, plant, equipment, why are they changing, okay? We'll be mindful of relationships between the lines that transcend sales. For example, inventory is really a percentage of cost of goods sold rather than sales. Depreciation is really a function of property, plant, and equipment rather than sales. We're going to be mindful of that, okay? But ultimately, it all goes back to sales. What is our percentage of sales? I guess the only line item that we absolutely cannot use a percentage of sales with is taxes. Okay, so to determine the impact the balance sheet has on cash flow, just checking here, all right, we must compute the dollar changes in the line items each year. The changes, okay? All right, remember that increases in assets are uses of cash, and so they are subtracted from cash. Decreases in assets are sources of cash, and this is added to cash. Increases in liabilities are sources of cash, and we are going to ignore accounts payable, to be honest with you, just to simplify things. And this is added to cash. Decreases in liabilities are uses of cash. This is subtracted from cash. What we're going to pay attention to are increases and decreases in assets. Okay? Putting it all together, operating cash flow, which we just projected, less cash outflows from reinvestments equals free cash flow, and that's what we're looking for. All right, so the items below represent the key things Apple will reinvest in 2013. And so what I've done is I've expressed these items as a percentage of sales. So here's a history of accounts receivable divided into sales, inventory divided into sales, and property, plant, and equipment divided into sales. So you can see that accounts receivable divided into sales has drifted a little bit lower here compared to where it was in 2010. And you can see that inventory has definitely drifted lower. And you can see that PP&E has actually gone up. Okay? So where do we think these numbers will be in 2013? That's our task. Okay? So as we did with the income statement, we look at these trends, we discuss with management each line items, and then we're going to forecast each line items. And here's our forecast. After we've looked at the trends, after we've talked with management, this is what we think the line items are going to look like. Okay? 13% for accounts receivable. This is not 60%, it is 0.6%. 0.6%. Need to change that. And then PPE is a percentage of sales, 11% in 2013. We looked at our trends, we talked with management, and we come up with our forecast. Okay? So what do we do now? Okay? We're going to multiply our 2013 sales projection by these projected percentages. And that will give us the amount of investment that we will have for each asset in 2013. Not the change, the total amount that we will have invested. Okay? We'll then subtract the balance that we had invested in 2012 from what we expect to have invested in 2013. And that will give us our change. That is the impact on cash flow. All right. That'll give us the cash flow we'll spend. So here we go. So we think that accounts receivable will go from 18.7 to 27.5. That's an impact or an increase in 8.8. That's a cash outflow. We think that inventory will go from 791 to 1.3. That's a change. That's an increase of 477. That is an outflow. We think that PP&E we'll go from 15.5 to 23.2. That is spending of 7.7. That is an outflow. Let's add up our three outflows, and we think we're going to spend $17,000 on assets in 2013. So we have our cash inflows, and now we have our cash outflows. Okay? See how far we get here. So this is our last slide. So our projected cash flow for 2013 is $63,303. Let's go back and make sure that we're right on that. Let's just check that real quick. Bear with me, I just want to check that. Oh, there it is, 63,303. That's where that number comes from. So let's go ahead and move forward. So that's our cash inflow. Minus 16,995. Here we go. And our projected free cash flow for 2013 is 46,308. This is what we expect Apple to generate in 2013. Okay? All right, we're going to stop there and move on to some other issues in the next clip. Shalom. Stay tuned.